Hi guys, welcome to Money Theory. In this channel, we'll explain the foundations in economics and finance. Through these principles, you're able to create your own financial plan that is personalized to your situation. In today's video, we'll cover the concept of flow of money in the economy and explain how economic shutdowns or stay-at-home orders can devastate the economy. In this image, we can see how money flows throughout the economy. We're going to break down each section, so don't worry. But first, notice that we use the word flow. That is why we call the money currency. It flows like a current. Now let's break down each part of that diagram. First, let's look at the relationship between household and firms. Household is the employees of the companies or consumers of business products. Firms are the businesses that hire the employees and sell those products. Money flows from businesses to employees in the form of wages, in exchange for labor. The money also flows back into businesses in the form of purchases of the business products. Now let's add government into the picture. Money flows from households and businesses to the government in the form of taxes. That comes in the form of income tax, property tax, or business licenses. Money flows from the government to households through creating public services such as roads, schools, and parks. Money also flows from the government to businesses through creating loans or purchasing the business products. This is like blood and oxygen in the human body. Simply having it in the body is not enough. It must flow in order to exist. Another interesting concept is the velocity of money. That is the measurement of the flow of the currency. In the image above, velocity of money is represented by the lines. The vertical axis is the velocity and the horizontal axis is the year. The shaded regions represent the recessions. As you can see, the downtrends of these lines match up with the recessions. So there's further evidence that slowing down the flow of the money can destroy the economy. The coronavirus is an example of how stopping the flow of money can destroy the economy. Stopping one part stops the entire system. In this case of the coronavirus, the quarantine required non-essential businesses to close and their employees to stay at home. The lack of work eliminates the wages from the firms to the households. This creates negative feedback that eliminates the demand for products and services from the consumer, which eliminates the flow of money back into the firms. Then with less employees and businesses to pay taxes, the government receives less money. This creates a desperation to raise taxes wherever they can. This is also my suspicions for why states like California are taking drastic efforts to raise taxes. From the lockdowns in spring and summer, we definitely witnessed and experienced the effects on the economy. The lockdowns that were originally stated to last a few weeks became 3 to 6 months. Employees were furloughed, and with limited source of income, they fell behind on their bills and housing payments. Money from Paycheck Protection Program, originally intended to support small business during the crisis, mostly ended up going to large corporations. Even with businesses reopening in the summer, California unemployment was still in the millions. Then in recent news, states, including California, have announced further lockdowns. They said the new lockdowns would be for a couple of weeks, but we know how that turned out last time. So this isn't an argument about whether or not the virus is real or whether or not masks are effective. This is simply insight into how the economy needs to function. I hope you enjoyed the video. Be sure to check out my photography Instagram, and you can reach out to me if you or anyone you know need my services. My specialty is portraits, real estate, food, and business products. You can also check out my Realty Facebook page and reach out to me if you or anyone you know need to buy or sell a home or investment property. Thanks for watching.